All right, good morning, everyone. Futures Brizio here. It's about quarter to 8 a.m. on Friday, October 17th. Hope everybody's having a good morning so far. Uh, it's probably the earliest I've gotten on YouTube in probably a long time. So, in terms of making videos, I mean, I'm always up looking on my computer at this time, but I'm not usually making any recording. So, just going to jump in and take a quick look at everything, and then we will step out. And obviously, a lot of these markets are not open yet. The grain complex not going to open till after 9. So, but it's okay. We can just take a look at where they are statically here and what happened during some of the overnight trading. So. We'll start here. This is the British pound futures, and this is the same trend line I had sitting on here from the video yesterday. And you can see we have breached that trend line now, although you can still see we have this overhead resistance area here. There's been a lot of selling off of this zone. You can see, failed attempts and then bumping up against here. So that's this line I have drawn in here. And so we'll see if price can get through here. And I'll say it again, we don't have commitment of traders data. We're not going to get it today. Normally, we'd be getting an update this afternoon, unless miraculously the government reopens today. But even if it did, we probably still wouldn't get it that quickly. So we're just going to have to, put that aside. But remember, the British pound was showing more of a bullish stance on the last COT update we got, which was coming up on 3 weeks ago now. So we'll see if we can get through this area. Then that probably will void the downtrend. But I'm not ready to say the downtrend's over yet. Breaking of trend lines is not enough for me because. Really you still have to look at market structure primarily, and we haven't gotten there. You can see there's already some selling into this zone. It doesn't mean it's going to hold. A lot of times, if we don't see very strong bearish reaction from here, like candles like this one, where it just with force it pushes away from that area. If we get a lot of this stuff with these indecision candles or small range candles, that is actually to me is going to be more of a bullish sign, that the sellers cannot push this down, and that more importantly, there's no big, large traders really trying to push this thing back down again. So there's this, push and pull in here, but overall, there isn't any big forces to push it lower again. So we're kind of in this in-between zone between the break of the trend line and this overhead liquidity and resistance area here. So we'll see what happens. A quick look on the 1 hour chart. We had some overnight. The last, during London, we saw price did push down for a few hours right here. And then, the last 3 hours have just been kind of moving sideways, which is not unusual as we wait for the New York Open. And you can see, even with that push down, even on this time frame, we held we held a lot of this support right here. So it'll be interesting to see if this thing swings back higher again. But if we get some really, like I said, big candles pushing back below the trend line, then that would void any bullish outlook. But as of right now, it's kind of in between. So let's see what happens when things warm up a little bit later. New Zealand dollar still just bumping against this trend line right here, and again we still have this overhead, much like the British pound. We have this big overhead area. It's a little bit interesting because on the shorter time frames, it looks like it is having trouble moving down. You can see the last couple of times where it's tried to come back to the trend line, like in here. We get these big bearish pushes away with big candles, and price goes down and makes new lows. And so, we're not really seeing that in this recent run up towards the trend line. Now maybe this wasn't it, maybe it's this, and we'll see, you know, a big bearish push away from somewhere in here. We'll have to see. You know, in terms of overhead areas, well, there's really a couple. We've got this one right here. Didn't quite make it back to the trend line, but here on the 4-hour chart, this is a decent area to look at as an overhead zone. But again, we're nowhere near that. So for now, this is still bearish for sure. Until, you know, again, we get some sort of real big sign that this is pushing higher. Remember, again, New Zealand dollar and Australian dollar on the last COT a few weeks ago was in a more bearish setup than bullish. So I wouldn't be surprised to see if we see some sort of big push away at some point. I would have liked to have seen it get a little closer to the trend line, but either way, this is the 1-hour chart. Again, there's a lot of indecision here. Small range candles, lots of wicks, just kind of, you know, drifting down, then moving up. So we'll see if we get some forceful push away here. And that's what I'll be looking for. And Australian dollar, pretty much the same thing. Although this one's a lot further away from the trend line. We do have a double bottom here where this, you know, had a minor pullback, tried to go lower and couldn't. So I still am expecting to see this potentially trade higher again. You know, this is what I drew in yesterday, and you know, because it looks like sellers are going to have a hard time getting through here without at least another push back up. This is the 12-hour chart, by the way, and you can see that also this area where these lows were put in, if we look to the left, has been an area that prices has bounced off of. So we may see a bounce from here that could go a lot higher. So I'm becoming less interested in the Australian dollar just because of what the higher time frame looks like, and the fact that, you know, that this setup is getting uglier and we're not really, you know, making clean runs back towards the trend line anymore. Whereas I think the New Zealand dollar is a little more clear, even on the higher time frames. I think it has some more area to run down. So let's see. So jump over to futures, to this grain complex, and again, this is the this is soybean oil, and you can see yesterday we did come up here and throw a wick through the trend line right here and reject it off of it. 4-hour chart, here's the rejection candle, tried to push higher, pushed it right back down. So this looks like maybe it's all been corrective, all of this kind of stair stepping up right here back to this zone. And again, you know, the thing is with trend lines is that they can be self-fulfilling prophecy, right? Like everybody sees this trend line. It's not like I'm the only one that's drawn this. So, you know, we'll see. But this does look pretty bearish. I do have a price chart, price alarm set. I didn't trade this at all yesterday. I wasn't actually even really looking at it. Kind of bummed now because this is a good setup here. But anyways, if this is going to make new lows, then this is going to go a lot lower. I mean, if we're going to run down here and make new lows, then this will pop through here, all down here. But the one thing that has me a little concerned is that, again, when you see these pullbacks like this one, and then compare it to this one, I mean, what do you see? You know, on these two, it was mostly bullish candles. It was pretty aggressive to push right up, tag this trend line, and then we had the big sell-off. Same thing here. Except for one red candle, these are all bullish candles that ran. They just quickly pushed it right back up to the trend line, and then a hard sell-off with no blue candles. Okay, well, look at this one. We have we have a push off, very weak, and then a higher low is put in, and then another push off, and another higher low is put in, and then this one. I mean, technically, this is a higher high because it is higher than this one, although I don't like these big wicks, and I don't like the fact that it's at a trend line. It does look like a rejection candle. more than a higher high, and potentially a higher low, right? Higher low right here. Is this going to end up being a higher low, and then we pop through this trend line? If we do, then that would switch more to a bullish bias. So while I do, like the fact that we have this rejection off the trend line for the bears, if you're bearish in this market, it is a little bit concerning just from the standpoint of this overall pattern versus what we saw on these pullbacks. So we'll see what happens. Keep an eye on it. But this is the area to look for. Maybe the trade was to get in here and trade it down a little bit. But if we don't get an impulsive move down to take out at least these lows right here, then this could just turn into another higher low right here, and we turn and go pop back higher. If we put a fib on here again, for what it's worth, we're sitting around the 61.8 fib level now. So let's see if we get any real aggressive bullish action on this thing, then it's probably going to go right through this. I think if we get bullish price action, strong bullish price action here, this will pop right through. It'll take out this high, and then we'll run up to at least this next liquidity area up here, or somewhere up here. So we're kind of at these in between. And remember, from a standpoint of commitment of traders, again, we've got to go back a few weeks now, so we're at a little bit of a disadvantage, or a big disadvantage as far as that goes. All of these grain complexes were set to go higher just based on COT and, more importantly, seasonality. Seasonality, for sure, they were all looking more bullish. So if we look at soybeans, we've kind of got the same setup. And this one's interesting. This is almost like soy oil, the one I just showed you, with this big wick rejection. Only this one didn't come up to the trend line, but then this followed by a very bullish candle. So again, we've got the last tag of the trend line here. But if this turns out to be a higher low right here, if this does not roll over and keep going down, then I would expect that, we're going to break through this trend line and start heading higher. So soybean meal has broke. So let's go back to the higher time frame. Again, this one, all right, again, so we're starting to see the pattern here with these with this soy complex. Potential higher low being put in here on the 12-hour. We had the last tag of the trend line, then we kind of drifted lower. But, we didn't get any like super bullish, bearish candles here. A lot of wicks. You can see it struggled to go lower, right? I mean, there was a lot of attempts to go higher. They were all rejected. But we didn't have this big, giant bear candles like these, like really slamming it lower. All right, we had a lot of indecisions, wicks on both sides, small range candles, even on this time frame. And so that is not a good sign. But of course, we had that over here too, and then all of a sudden we had the big drop, right? We had a lot of indecision to start, and then boom, then it popped lower. But now we never got the pop lower. Drifted, and now higher and through the trend line. So, and a potential higher low being put in here. So I'm, again, from a seasonality standpoint, these should be going higher. And we're late on it. We're late on a lot of these turning. But again, the seasonality doesn't mean it's going to follow that every year. And it may follow it, but not exactly on the timing. Those are just general views about what usually happens when they average it out over time. But it doesn't mean it's going to always hold that. So this might be one of those situations where our seasonality is going to start to come into effect. We're a little bit late getting there. So that's the soy complex. Again, the soybean oil is the one that's still lagging a little bit. But again, we're putting in higher highs and higher lows. And again, if we put in another higher low and break this trend line again, then that probably will void the downtrend. So, and that would fall in line with soy meal and soybeans. So, let's watch that. That might be our opportunity. Corn, again, not beating a dead horse. COT wise and seasonality wise should be going higher. You know, we did again have this run up that started back in August. Looked like that was going to be our turn and go higher. And then somewhere around mid-September, about a month ago, we started trading lower again. And we started putting in these lower highs and lower lows. And now we're sitting exactly right now at the last kind of swing level right here. You know, I drew this line in a couple of days ago, and we are now sitting right at it. You can see price is trying to reject off of it, which, you know, of course, because, again, everybody sees this area. So the bears are trying to, you know, push this thing down and get through there. But it's been pretty bullish here, even on the 4-hour chart. You can see pretty bullish run up to this area. Now, I do expect to see at least some kind of rejection off this. You know, whether it turns out to be a big correction where it comes like all the way back down towards the trend line, you know, maybe back down to like near this low, something like that, and then go higher, or whether it's just a small retracement back to here and then we pop and go right through the trend, this overhead resistance. I don't know. But, you know, overall, it does look like corn may be making that turn and to go higher now too, which again is in line with the seasonals. And we'll just have to see if this is it. It's looking pretty good because you can see, you know, we've never, this whole push down, we've never seen the price come all the way back and basically make 100% retracement, which is where we're at now. We're essentially at 100% retracement. And that's, you know, sometimes that does happen where it comes all the way back to the origin, but this is looking pretty bullish. So any break above this high right here would certainly point to higher prices. But from where it is right now, I would not be surprised to see some sort of pullback as the sellers try to make another stand to push this lower again. But again, if it's just kind of small candles, indecision candles, a lot of weak price action. Remember, you know, that it's the big players that push these markets, not you and I. So, you know, this type of thing right here, you know, this big giant bear candle, you know, obviously there's some retail in here, but this was set in motion by, you know, large institutional traders and the big money players. We can only hope just to jump on their back, but this is, you know, clearly, you know, a high volume, you know, institutional type move that pushed this down. So small little, you know, red candles with big wicks and stuff, that's not institutional selling. That's just noise. And so we need to see if we're going to, you know, pop through here. And if we get through here, then we're going to start triggering off all kinds of buy stops. And yes, we do have to watch for like a fake breakout. But I like to see these breakout candles close, you know, at or near their highs and on higher time frames. So I don't want to be seeing a breakout candle close on a 5-minute time frame. That could easily be a fake out candle. But if you see it on like a 1 hour or a 4 hour and you see a solid candle close above here on a time frame like that, like a 1 hour chart or higher, that has more credence because that certainly could mean that there's some meat behind that move up. So that's corn. Again, kind of the whole grain complex in general, potentially looking to go higher. I say potentially because I don't think any of it's confirmed yet, but it's, you know, some of them are looking better than others. Interestingly, though, rice, which is a grain, but it's different than corn and soybeans. Rice is not making the turn. It's still basically trading down, although it's kind of hard to see it. But you can see as it's coming down here recently, it's struggling a little bit to actually go low. It is still going lower, but it's not as just aggressively, tracking down these moving averages. You can see there's a little bit more indecision, uh, you know, where prices, coming up and throwing wicks. And then, yes, it is still drifting lower, but it's not as aggressive as it was. I'm certainly not saying that this is becoming bullish. Again, from a seasonality standpoint, rice should start turning up. But remember, for rice, it was more like November and after. So it's still early, but this could be the kind of the early signs of, some this downward momentum kind of slowing down a little bit. So I'm certainly, not ready to buy rice by any means. But we'll keep an eye on this because over the next couple of weeks, as we get towards November, we very well, maybe could see that seasonal turn and have this thing pop higher. And if all of a sudden one day we see like a big bullish candle, even if it hits the trend line, but we see a big bullish candle that's like completely out of place, that could be the sign that the institutional buyers are starting to, come in. And maybe we've got some little secret accumulation going on in here. So it would be nice if we had the COT data, but we don't right now. So, because that would help us. Oil, just quickly on oil and natural gas, does continue to trade lower. There's nothing going on right now in terms of trade setups. To me, it's just, it's kind of in a pullback phase. This price has gone so low. I mean, it's crazy. Like I said yesterday, it hasn't been this low since like the beginning of COVID. I mean, we're down to under $56. That's crazy. So, but a lot of that is just because oil production has gone up here in the U.S. in particular, and so because we have a more favorable administration now for this type of production, and so that probably is weighing on it on the price. So we'll see how low they're going to let it go. I mean, normally at some point the producers are going to start, looking at tailing back some of their production, whether it's the U.S. or OPEC or whatever, because the price starts to get so low that they're not. It's not worth them even pulling it out of the ground. So I don't think we're there yet, but these type of prices, once you get under like $65 really is low. And if you go back and look at a historical chart, you'll see, the lows during COVID, which were lower than this, but even that was very temporary. It like went down and then it quickly ran and came back up. So, and then natural gas keeps drifting low. I said I'm not really following natural gas much right now. It should follow pretty much in line with oil. So if we do start to get to a turn on oil, then we probably see natural gas start to pick up momentum. But I'm not really spending much time on natural gas right now. So, or even oil for that matter. I'm more interested in these grain complexes right now, and potentially something in this currency, something like British pound, as it should be going higher based on COT data, and potentially New Zealand dollar going lower. So for currencies, it's the pound and the New Zealand dollar. I'm watching the whole grain complex except for rice right now. Rice, I don't expect to see any big shift until next month if we get one. And we'll just continue to marvel at oil prices going down. So for now, so yeah, so that's it. So I'll be watching a couple of these grains really close. That might be our opportunities. Corn and what do we say? Corn. I mean, soybean meal is looking good. Soybeans still not great on soybeans yet. Just technically looking at the chart. But again, if this is a higher low, then this is probably the beginning of an uptrend. So we'll see though. But we still have the trend line overhead, and we do still have it far enough down where this could easily just be a pullback and then another push down. We don't know, but so that's not my favorite one. But corn, potentially soybean oil if this low holds, and soybean meal. Those three in particular are what I'm looking at. So, all right. So nothing active right now. Oh, actually, no. You know what? I do have a soybean meal. Yeah, I do. Okay. I forgot to put this on. This is soybean meal. This is a micro contracts. I took this 2 micros, which is a really small trade. But I took it because it was during the Asian session and I wasn't really too thrilled. And I have to use Heikin-Ashi candles on here. If I change this to regular candlesticks, you'll see it's because it's a micro contract and it's the December contract, there isn't a lot of volume in here. I mean, it's going to end up following the larger, the non-micro contract, but because it's so choppy like this, I can't really visualize anything. So I just changed these to Heikin-Ashi candles just to at least make it blend together. You can see there was this huge spike over. I don't know what the heck this was. This was during the overnight hours. But the price recovered, and now it's just kind of sitting here because we're waiting for the market to open. So I am long on this, not in a full contract. If I'm going to enter on the full contract like this one, I would definitely be interested in that, but I'd like to see a pullback first because we've, since we broke this trend line, we've had, nothing but bullish candles here. This is the 4-hour chart. Even the 1-hour chart, it's been pretty much all blue all the way up. So I'd like to see some sort of pullback here and look for an entry there instead of just jumping in, because chances are at some point here, well, for sure, at some point we'll get a pullback. Maybe it won't happen until we get closer to this overhead line up here, or this one. But we will get a pullback. So, but anyways, yeah. So that's it. Keep an eye on these grains, and might look for some opportunity there if we can get some pullback and setups. Again, it's limited trading hours for grains. That is the one drawback of trading them is, you've got about a 3 or 4 hour period, and that's about it. Where if you're gonna get something, it's gonna be during that time. So, and then of course, like I said, British pound and New Zealand dollar. So keep an eye on those too for turns. So, all right. So I'll leave it there, guys. I'll be back. Maybe I'll be back later today. Actually, I probably won't be back later today. I'll be back over the weekend. We'll do some sort of wrap video on Saturday or Sunday. So, and look ahead for next week. All right. So have a good rest of the day, and we'll talk to you everybody soon. All right. Thanks.